Hello and welcome to BQ Prime. You're watching Earnings with BQ. I'm Monal Sanghvi and our guest today is Mr. Pranav Amin, the Managing Director of Alembic Pharmaceuticals. Welcome to the show, sir.
Thank you, Monal.
Alembic has had a good quarter with its revenues up 18%, net profits of 120 crores versus a net loss last year, slightly above estimates as well. EBITDA is up at 199 crores. However, the margins are lower than the street estimates. They come in at 13.4% versus 1.2% last year. So what has led to this performance? What is the direction that you're seeing the company is going to take? And why was it slightly below estimates?
Thank you, Monal. Okay, so a few things. One is it was a pretty decent quarter considering the last couple of quarters that we've had. If you see across the four verticals that we operate in, India business had a good growth of 9%. I think what is more encouraging is as per the IQVIA data, we've grown faster than the market in specialty as well as acute. So that's quite promising. And I expect India to continue growing moving forward. US is a large part of the business, which grew at 6%, which is also, as you know, Alembic had phenomenal growth in the US up until 21, where we had a lot of price erosion in the the sartans and some of the other products. So 6% growth is pretty good for us over there. The other two verticals, the rest of the world generics had a phenomenal quarter that grew 46%. These are all regulated markets that we operate in, mostly regulated markets. And API has been a very solid business for us, and that grew also at about 30%. And that's consistently been doing well for the last 8 quarters or so. So overall, all the verticals had a pretty good growth. I think profit was also pretty decent compared to the loss last year. One of the reasons for lower than estimate probably could be is we are reinvesting. So we had a higher amount of promotional spend for the India business because that's a priority and we want to build that up for the future. And on the US side, we had these new facilities that have come up on stream. So these are not fully utilized. We've just started launching products. So there's a little higher overhead cost because of that.
Okay. So on the US front, how is the price erosion?
The price erosion is still there. Is it as bad as it was 6 months ago? It's a little better. It's still there. I think in a handful of pockets, we're seeing a little lesser or a little more opportunities. As you may have read, there are some facilities which got into a regulatory issue. So we saw some opportunities in inhalation, in ophthalmic, and in injectable facilities. But again, our portfolio is not huge. I think we will slowly be launching more injectable products as we go along.
So what is typically the percentage of erosion? Also, there's been a talk about drug shortages in the US. So do we have our exposure to any of these drugs that are under shortage, and are we looking to benefit from them?
Yeah, so historically, what Alembic has done very well is we work very well in drug shortages and when there's supply chain issues, because we focus on supply chain supply chain resilience. And what we do is we're very fast to get to the market. If there are any opportunities, we're very fast to scale up. And we do try getting a little better pricing when that happens. So we have enjoyed that situation the last 5-7 years since we've been in the US market. Currently, there were some shortages. I think the US market is a unique market where you do see shortages all the time. In the last quarter or so, the shortages were a little more because, as I mentioned, there's some facilities which got into a regulatory issue. And I think the market share that both these facilities had was quite high. That led to some shortages. Injectable is an area where continually there are shortages. So we do see some of those opportunities as well.
So on the plant front, you said a couple of US manufacturing sites are still not on their complete capacity utilization. So what is the utilization that we are seeing? Also, by when will you expect this to ramp up? And are we using these facilities to also eventually supply to the other emerging branded markets? Because I believe that was also what was said in the previous quarter, if I remember correctly, that you're diversifying your strategy in terms of targeting other branded formulation markets. So yes. How does this play out?
Yeah, sure. So it's a good question. So what we're doing is if you see our older facilities, be it either the API or the old formulation, the oral solid dosage facility. These are all working at a theoretically or a practical optimal capacity. There's a little bit of scale left, but that's enough. I think we're pretty happy with the capacity utilizations there. The two new facilities, which is the onco facility, which has the oral solids and injectables, as well as the pure injectable facility, which has injectables and ophthalmics. Those two are still in a very nascent stage. It's just been one quarter. We've launched one product from the general injectable facility, 4 products from the oncology facility. So as we go along, we will see more launches coming in these facilities. So there's still a way for it to go to get to full capacity utilization. When we invested in these segments, I think the whole goal is we had an abnormal amount of higher R&D spent towards the US market, which was a priority market. But we are scaling these capabilities to the other markets as well. So our R&D cost is something that we've been optimizing, and it's down. I think this year will be below 500 crores for our R&D, which is a huge reduction compared to where we were in the past. But more importantly, is a lot of the allocation of that R&D has gone from oral solid dosage to injectables and onco, and also to some of the the rest of the world generic markets as well.
Injectables, if I remember correctly, was also seeing a lot of competition. So is Alembic in a segment where you do not see as much, or what is the sort of competitive intensity that you're witnessing there?
So I think the competitive intensity in injectables, while there is competition, it is lesser than it is for the oral solid dosage. So that's always well. And as it is more technically more complex, you get an opportunity to see more shortages and more issues over there as well.
So my final question on the US before I move to the other markets. So what is the growth strategy and what sort of pipeline do you have for the market?
Yeah, so we're filing about 20 odd products every year, 20 odd ANDAs every year. So I think we will keep launching those. This year, our plan is to launch, in the first quarter, we launched 6 products. Moving forward, we will launch up to 20 products in the US this year. So we just continue launching. And as I mentioned, I have a robust supply chain which can cater to opportunities in the US. What's more important is that your facilities have to be compliant. So far, all our facilities are FDA compliant, and we've got EIR in place for all of them.
So in the India business, we've had a 9% growth. So what are the pockets where we are seeing growth? Now that you said that you're investing more towards developing the Indian market even further, what is the strategy that we have? Are we targeting some new therapy areas? Are we targeting new geographies? What is the coverage that we are looking at?
No, so geography, no. So I think the India business, we're pretty much covered across all geographies. But we've been new in some segments, and I think it's just a matter of building up a presence in some of these segments. Historically, Alembic was always known for its anti-infectives, and then with the Dharma acquisition, we got into some of the specialties. So it's just a matter of growing and establishing ourselves as a stronger player in all these therapies. So what's happening is we've grown both in specialty as well as the acute side, including anti-infectives, much faster than the market. So that's a positive sign, and we hope to continue this momentum going forward. I think it's just going to be, as you mentioned, the existing, all the new areas that we have launched in NWD, the derm, ophthalmic, gastro, some of them older as well, and just becoming stronger in those therapies.
I have a question on the Dharma portfolio that you recently acquired, the Allure. It was a complete acquisition from the GD. How is that portfolio performing? Because globally, I believe, at least in the US, we're seeing some pricing pressures on the Dharma portfolio. So how has that performed?
So Dharma, we've always had a majority stake in that company. We just bought out our partners from the business. So in terms of FDA compliance, the plant is very good. We've got a whole bunch of ANDAs that we filed. The last quarter was surprising, and you're right, there has been a lot of erosion in the derm side in the last couple of years. But last quarter was a fantastic quarter for the derm side. We saw a lot of opportunities because there were some shortages in the market. So we made decent money on the derm side. Hopefully that can continue moving forward as well.
Okay. So on the India market, what percentage of our portfolio has exposure to the NLEM, and have we seen some softness there?
I think some part of our older portfolio had exposure to the NLEM. Nothing new per se has changed for us much, so it really doesn't impact us much moving forward. I think some of our old brands are part of the NLEM, and that's okay. It's part and parcel of the game. We just go on with it.
So there's been a 17% increase in staff costs. So that is the staff towards the Indian markets that we are increasing the number of MRs, is it?
No. So the staff costs have been on 2 fronts. One is because all these new facilities have come upstream, right? So their costs have started hitting the P&L. you have two state-of-the-art facilities coming upstream. So that's it. Hit the staff cost.
And so if you could help elaborate and understand on what is the geographical, I mean, you're looking at the ROW market. So what are the geographies that we're looking at? What is the sort of growth in the API segment that you have? Also the animal healthcare, I believe that's also a smaller pocket which is growing consistently.
Sure. Yeah, so all three are very interesting segments for us. I'll start with animal healthcare. This has been it's not it doesn't seem like a glamorous business, but it's been a steady performer for us over the last couple of years. It's a very well-run business, and we're very strong in the segments that we operate in. And that had a very good growth this quarter as well. So I think we'll continue growing in that, and we're very happy with the way that part of the market is growing. So that's very good. API again has been a strong performer for us. If you see the last 12 to 14 quarters, it's been consistently growing, and this quarter as well, it grew at 30%. We've been focusing again on supply chain robustness, ensuring we have products, ensure we are strong on the regulatory side, which has given confidence to our customers to partner with us and move forward. So that's been a very interesting portfolio for us. We hope to build that more as we go along, and we're doing more research and adding more products on the API side as well. The rest of the world, international generics, and this is all regulated markets where we operate in. The large territories that we operate in are Europe, Canada, Australia. We use a little bit in South Africa and a little bit in Brazil. So these are broadly the larger territories that we're present in. Our strategy is a little different. We haven't gone directly. We do work with partners because we believe they're pretty strong in these territories. Again, focusing on regulatory and supply chain and ensuring we can get our partners with the best products. So the last quarter was very strong because just being able to supply and giving them ammunition to get more market share. So I think that's what helped us. Maybe others had supply disruptions, I'm not sure, but our partners could pick up quite a bit of market share in these products. So that was pretty good for us as well. And one more. So you said expanding these territories. So we are looking at new markets as well. Some of the new markets we're looking at are in Latin America as well as the Middle East. So I think it's still early days, but let's see how that goes.
So how do you think this the revenue breakup pie charts, like geographically, would look 2 or 3 years down the line? How much would be from the US? I believe US was the dominant market, but if you're looking at other markets, how do you plan to review this geographical sales mix?
Yeah. So let's look at it. It really depends on how. Okay, US was the most dominant market, and then we had a lot of erosion. So the US portfolios come down. So India is the largest market for us, and India will continue growing. If the market grows, whatever the market grows at, we will grow faster than the market. So India will continue growing that. US will see a uptick in volumes and the value as we go along, as we have more launches coming up, and next year we'll slowly get into the complex injectables that we've been developing. So US will continue growing as well up until we get to about $300-400 million. Europe ROW is also something that at present we haven't given a guidance, but Europe ROW as well as the API business, I expect at least 10% CAGR, 10 to 12% CAGR we will see in the next couple of years as well.
Okay. And so what is the margin target for FY24?
So the margin target, we haven't given a guidance, but what will happen is two things. One is, as I mentioned, the R&D costs will come down. So R&D, which used to be about 12 to 14% of our revenue, will come down to under 10%. And the second thing that you'll see is with these new facilities picking up steam, you'll have a little more contribution coming from there as well.
Can we get a number?
We haven't given a guidance, so it's tough to say.
Okay. And so my last question, what is happening on the M&A front? Are you looking at something, is it going to be more organic, inorganic? Also what geography?
Yeah, so I think as of now, we're pretty much not looking at any M&A. If something interesting comes by, we may look at it, but we're not actively scouting for anything. I think we're pretty happy with the organic focus that we have, at least for the international business. We've just built a lot of capabilities, and now just a matter of ramping up these facilities with R&D. India, if something interesting comes up on a portfolio, if it fits in well with us, we would look at it from M&A. But as of now, we're not actively seeking anything.
Thank you so much, sir. It was a pleasure having you on the show.
Bye-bye.